Need a resolution to approve the minutes of the last meeting. Evelyn, seconded by, what's your name again, Ron?
Santa for that.
You know, I'm getting older, it's slow. All in favor?
Aye.
Opposed? Carried. Okay, Lee, you're on.
Okay. Well, the first order of business, I think I'll pass it off to Amy, is the, the insurance renewal. Gotcha. Everybody has a copy of this, I hope, and it's changed slightly that, in that there's a couple of asterisks. And that are options. But what you see is insurance. It's basically based on what your current renewal is, and the number that probably has changed the most is the law enforcement professional number, which is about halfway down the page on 105. And I mean, there's a lot of good things going on the insurances in terms of rate reductions. What the law enforcement number represents is a combination of three things. One is, well, two of them really are totally out of your control. You know, one of them is the increased number of guards at the correctional facility, and which is a rating basis, and the other is a change that the insurance companies and all the companies are doing this is used to be transportation of inmates. That was done by unarmed guards. Now all those guards are armed, and armed guards carry a higher rate than unarmed. And the insurance companies started picking up on that the deputies that are transporting, you know, to other facilities or court appearances or whatever are armed officers, and so they use the same rate as any armed officer that is doing road patrol, and which is a higher rate than a correctional officer. And you know, and then the third thing is you know, your experience there. And so because of that change, and also in looking at the you know, the kinds of claims, one of the things you'll see there is an asterisk, which is an optional deductible on law enforcement, and that optional deductible, and the note is on, I think it's 405. It's at the bottom of 405, but it's to change the deductible to match the deductible that's on public officials, which is $50,000, and the credit for that is $22,384, and what that, and just backing up and talking about what a deductible is. A deductible is something that the county pays if there's a claim that is either adjudicated or settled, and what you pay is for the judgments and settlements of that claim. The deductible, it does not include the cost to defend those claims by your insurance company, and the reason I asked for and thought it might be a good option is, the unfortunate thing is the law enforcement suffers a lot of claims. However, historically, the county is very defendable, and actually claims that have gone to judgment have been very rare. And so, whether it's a $25,000 or $50,000 deductible, either way, they have been very rare. Now that's not to say that the county shouldn't be putting away some money for someday where there's going to be a case where there is going to be a claim with, as we call it, legs. But if you took the $22,000 savings and the $25,000 deductible you already have, you're pretty much at the $50,000 deductible that is an option for the committee to review and determine whether they want to go that route. Then moving through the other.
Lee, before you go on, what's our claim history for law?
The claim history for law has been very good from a judgment and settlement point of view. Unfortunately, on average, it's costing around $100,000 a year for the insurance company to defend the county, on average. But in terms of losing cases, actually we looked back at a 5-year period, and we have some that are reserved, but there's been no claims in the last 5 years that have exceeded the $25,000, and most of them haven't exceeded $10,000 in the last 5 years.
Just a quick question, Lee. In terms of potential savings, to have an armed correctional guard, to not have an armed correctional guard, would there be any savings? I mean, if you look at the New York State prison system, I've observed some of these guys. In many cases, these guys are not armed. Okay.
Yeah, that's correct. But it depends on who they're transporting. You're probably absolutely right. And for example, many times, like for example, the shock, officers are not armed. I think the standard today is for prisoner transport, because those inmates could be a mixed bag of violators. They haven't been sorted out. The standard today is that most of the transport is done with armed officers, and I know the county kind of minimizes that as best they can, but most of it is with.
Thank you.
Jim?
The 191, is that with the $50,000 deductible?
No, no, that's with that's as is. That's with it would go to 169,337. And then on the last page, if you chose that option, the last page would go to 689,331 and 72 cents.
689?
689, yes.
How can that be? I don't see how it can reduce the premium to 169, which is still more than last year, and yet the total is less than last year if you take that option. That makes sense? All right.
Yeah, there's been some very good things that has happened, particularly in the general liability area. The DPW has done very well for itself, and general liability is claims for road hazards and fall down type claims and things like that. And the experience is very much improved over prior years.
Okay, any other questions?
There's one other option that I wanted to review with you, and it's on page 3 and then also page 5 of 5, and that is currently the equipment policy is with Hartford Insurance Company, and they've done a fine job with that, unfortunately Hartford cannot offer. They offered and if you flip to page, sorry, if you flip to page 5 of 5, the deductible last year with Hartford was $2,500 on EDP and auto physical damage. However, on contractors' equipment and a bunch of other things, there was it was $1,000 deductible and then $500 deductibles, and employee tools was a $250 deductible. They are not able to offer those lower deductibles anymore, and it has nothing to do with Warren County. It has to do with their corporate decision on big schedules of equipment to offer only high deductibles, and because of that, we approached a number of insurance companies, and Hanover Insurance Company basically said that we'll match the Hartford price. So the issue is not cost savings. It's basically deductible savings. The good side of that is, when you're talking about watercraft and radios and voting machines, it can be a maintenance issue. Those sometimes are one-off accidents, rather than a lot of them getting damaged at once. They tend to be one-off accidents. The flip side of that is, whenever you get more companies involved, for example, if there's a garage fire, instead of having 2 companies involved, you may have 3 companies involved. That's kind of the downside of it. But the coverages are the coverages, and it just sometimes it'll complicate things a little bit.
Could you just touch on employee tools? What's the average cost of employee tools? It seems like $2,500 would be a lot. But
The employee, that's a very good question. Thanks for asking that. That actually comes out of a contract requirement that the county has to provide coverage at those levels. And actually, the experience has been good, but there's a and I believe the contract provides up to $50,000 per employees and the maximum of $25,000 on any one item, and it has to do with mechanics, mainly mechanics tools in the highway garage.
Yes, and some of those are very expensive. As I recall, when we first did this, there was only 5 or 6 employees that totaled that $150,000. They have their own toolboxes. A lot of them are those snap-on toolboxes that are very costly a piece, filled with their own tools, and that's what that coverage is for. And it is in the mechanics garage.
Rachel?
What would be your recommendation in terms of deductible versus or the comparison that you have
here? I think the departments would say that their budgets are so thin that I think the departments would say their budgets are so thin that they don't want to get killed with deductibles. I think that's what they would say. I don't know. Again, because, for example, watercraft and boating machines, those are kind of usually one-off claims.
Any other questions? Are those the only options,
Yes, yeah. Yeah, the NYMER's done a very good job with handling claims, and they've really been very responsive this year.
All right, why don't we take these one at a time? Is there any interest in the first option, which is, increasing the law liability by $25,000 to a total of a $50,000 deductible? That'll save us, what, 20,000?
22.
22,000?
I guess my concern is if we have to come up with the 50, we've got Frank and Paul both here, you know, if we had to come up with a $50,000 deductible, you know, how's that gonna work? I know we have some money in contingency, we usually tap into that throughout the year, so my concern would be is if we had to suddenly come up with 50 as opposed to the 25, that might be a stretch for us.
Couple observations. First of all, as Lee mentioned, at least historically, we've done pretty well, so I think I would put that in the mix. But even if we had a bad claim that hit the 50, that would be 50, but you'd already had normally come up with 25. You got a $22,000 savings, so at least on one, it would basically be budget neutral. If we had more than one, it could get problematic, because now all of a sudden if you get two or three. But the other thing to keep in mind is that generally speaking, the claims will not occur in any given year. Like, if a claim arises this year in the new, because it won't apply to the old ones. The old ones will still have the $25,000 deductible. So we're looking at the new claims that will arise this year. The chances that they would come due this year, you know, is probably small. And so I'm thinking that as we go forward, we could plan for them. Plus the fact that if we are realizing the $22,000 in savings, we could also, you know, try to keep that in mind in terms of when we put together the next year's budget. I think what I'd like to see us do, much like what we do with the vehicle and equipment reserves that we have now, or the computer reserves, set up a small reserve to cover for some of these potential claims, because right now we don't do that. We pay for them out of whatever we have in our budgets. It's worked, but as deductibles increase, we'd probably be well advised to start building a small, you know, and make it easy on the budget. Don't have to do a lot in any given year, but maybe next year, for instance, set aside $10,000. And then if you keep doing that every year, it'll get easier.
Frank, would you agree with that course of action?
Yeah.
All right, I guess a show of hands, how many people are interested in taking the additional $25,000 of deductible? Okay, so that's the majority, okay. All right, and the next one is, equipment tools. That's a smaller number, what, for the $3,000? You're talking about going to the higher deductible for equipment and tools?
Yeah, well, the option is whether to keep the coverages with Hartford with a $2,500 deductible, or keep the deductibles the same as they currently are, and have Hanover provide the coverage.
So you get a less deductible for the same premium if you move to Hanover.
We move to Hanover.
All right. Okay, anything else?
So the resolution that I gave you for this would need to be changed. The bottom number would be $689,331.72, and add in there, if that's what you choose to do, to change the law enforcement deductible to $50,000, and change the inland marine coverage to Hanover for all but the auto physical damage and EDP equipment. That's the resolution on page 7 of the handout I gave you.
Okay, I'm gonna ask you one more time to go over that, now that I've got the right page.
The number at the bottom, the 711 would
Yep.
change to $689,331.72, and then add in there that we'd also change the law enforcement deductible from $25,000 to $50,000, and change the inland marine to Hanover for all but the auto physical damage and EDP equipment.
All right, is there any other discussion on this one? Someone like to make the resolution? Resolution by Evelyn, seconded by Ron. Any further discussion? All in favor?
Aye.
Opposed? Carried. Okay, employer's liability, I guess, is the next one, Jean.
The employer's liability resolution requested, and the other one is excess workers' comp. There's no changes in those other than the price. So I've done the resolution requested with the new price for 2015. Both of those are paid from the self-insurance fund, miscellaneous payments S-1710-469.
Okay, would someone like to move, or is there any discussion, I guess, first? Yes, any questions? All right, would someone like to move the resolution for the, employer's liability? One seconded by Peter. Any discussion? All in favor?
Aye.
Opposed? Carried. And on to excess workers' comp.
That's the same, there's no coverage changes, paid from self-insurance fund, the new amount of $160,050.
Evelyn, second by Rachel. Any further discussion? All in favor?
Aye.
Opposed? Carried. All right. I guess that's it. Any other business? Paul?
To follow up on the comments I made earlier, Mr. Chairman, and in view of the fact that we would have budgeted for an insurance premium that would have been the same at least as this year, correct, Amy? I think when we put our budgets together.
Yeah, it would have been a little bit more than this year.
Okay, I'd like to recommend to the committee that you consider referring this over to the Finance Committee for January. It would be at the end of January when this is done, by the time they finance, or actually be February, I guess. But to take the difference and start that reserve that we discussed earlier.
Moved by Evelyn, second by Ron. All in favor?
Aye.
Opposed? Carried. Okay, thank you. No further business, motion to adjourn. Ed and Peter.
I don't wanna work.